At the end of the day, no matter how good a pitch deck looks, all that really matters are the legal documents. And so that's what we're going to talk about today on the Furlo Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing. And our mission is to equip investors to invest wisely, especially on the legal side, so that...
In both properties
yes,
and residence.
In both properties and residence and the legal documents, so that together we can build wealth while improving housing. I'm James, and this is my wife, Jessie.
I have discovered this has nothing to do with anything except maybe I want to take my dog to court.
You want to take a dog to court?
Yes. I've discovered he does not just like water. He also likes mud.
Oh, he does love mud.
It drives me insane.
It does drive you insane.
It makes me very happy because he's very happy when he finds mud.
Oh my gosh, yes.
But it's real bad.
He just starts digging. It gets all over his paws.
Oh, yeah, all over his face,
mouth.
all over his belly. It's everywhere.
Yes.
And it is not like, I must have given him like 3 baths in a row and was still finding like dirt coming off of him.
Oh, amazing.
And was like, and we have a dog eater situation. So
yeah. So he can get in without being clean.
Right?
Yeah, we had one where I think it was the very first time that he got muddy. He, like, you were trying to bathe him, and it was, like, half working. And at one point in time, he took off. I was in the garage. All of a sudden, I heard him jet out, and I just saw him and went, oh, man. I was like, I don't know what to do. And he started going towards the kitchen, which has another doggy door. And I grabbed his doggy blanket and just threw it on top of him.
Yeah, I'm so glad you caught him because wow.
And so he didn't make it any further than the kitchen, thankfully.
Yeah, we just put that whole thing, the blanket, the dog, the muddy mess, all in the bathtub.
Yeah,
and then I gave him a for realsy bath.
Oh man, I remember that. That was pretty intense. Oh, it's fun.
Yeah, that is what we are navigating right now.
Yeah,
which,
you know what?
That's probably more fun than legal issues.
You know. Maybe.
That's why you should read legal documents.
Yes, it is important to know what it is that you're navigating.
What you're signing.
Totally. So this is part 8 of doing due diligence. We kind of took
Of how many parts?
Yeah, of 8 parts. So this is it.
This is it. Aww.
Yeah, I took my sweet time to kind of get through them.
That's all right.
So they're all scattered throughout, so you really got to hunt and peck to find them.
Yeah, that's right. Well, I mean, you could make a little playlist or something.
I could. There's one on YouTube, I guess. But yeah, no, this is it, talking about the legal side of it. And so part 8, so the first one, you're talking about the sponsor, and that's really important that you understand who that is, who you're investing with at the end of the day.
And these are all parts
just moved that camera. Hey, quit. Speaking of dogs, quit chewing. Can you stop him? All right. So while she's fixing that, this is the first one's all about the sponsor and how you want to make sure that you're investing wisely with that person, because at the end of the day, you're giving that person the money. The second one is about the property manager. This is really important for long-term holds. You then are going to care about the market, right? What's the context in which this investment is happening? You're going to care about the property itself, like the physical thing. What does it look like? You then are going to care about the business plan itself. What are we planning to do with this property? Mm-hmm. Related to that, if there's a big value add, like what's the construction plan? How is the money going to be spent to do that? Some have less of that. You then are going to care about the financing side of it, the numbers.
Right.
And now finally, boom, got them all. You like that?
That was pretty good.
Legal documents.
I don't think I could have pulled that out. That was pretty good.
So that's what this is.
And all of these are parts of a bigger document.
Correct. Called Good Deals Only, because the idea is we want you to only invest in, good deals only.
Yeah.
And yeah, there's 196 questions. And so these are
this is the final
set.
Set. Yeah.
Yeah.
20
of
or
questions.
so.
Yeah. So it finishes with the legal part, which it's interesting. And I tease this at the beginning. All the other stuff, it kind of doesn't matter. The legal documents are the only thing that matters at the end of the day.
And why? Because
the sponsor itself. But
is that just that's the fine print? That's what you're actually signing and what is going to be recorded.
That's the thing you're committing to. Yep.
So.
Yeah. So I've got questions that you should ask around it, but kind of let me give you the high level view, I guess,
Sure.
of what it's going to be. So it depends on the deal, right? Is it a long-term equity deal or is it a short-term, like you're given a loan type of deal?
Mm-hmm.
Will depend on the stuff. So let's do the long-term equity one because it's a little more complicated. So on that one, you are actually buying shares of a company.
Okay.
And so you, things around that, you are, when you form an LLC, it has what's called an operating agreement. That's part of it. You get a name and then you make an operating agreement. And the operating agreement spells out, here's how this company works. It says who's getting voting rights, who's in charge, what do you do for disagreements, like everything.
All the things.
Yeah, all the things. And it's usually, it could be somewhere between 10 to 30 pages, kind of depending on what it is. You then have what's called a PPM or a private placement memorandum. Now, that document is a very long way, typically, of saying your money is at risk. There's no guarantee you could ever get it. It could be gone.
Interesting.
And the way that they do it is very lawyerly, where essentially it repeats a lot of the stuff that's in the operating agreement, but couches it all with risk stuff. So it says here are the different risk factors. It talks about the major sponsors. So it would talk about me. And it talks again about here's the property itself, here's the market, here's what's good, here's what's bad. It's a very lawyerly, it almost replicates the pitch deck, or in my case, the pitch website.
Sure.
But all
in a legal format,
legal terms.
document.
So that, because what happens is with certain investments, you don't, they are exempt from submitting them to the SEC. And instead what you have is this document in place. And so this is kind of the full disclosure. Hey, Mr. Investor, Mrs. Investor, this is what you're getting into. That document, the most recent one that I did, he's totally causing a problem. The most recent one that I did was 45 pages long. And it had all the different stuff in it. It had the breakdown of here's the expected return, here's the breakdown, all the math. Again, it's as if it's like a lawyerly version of the pitch deck.
Wow. How many pages did you say? Mine
was 45.
Oh my gosh. So me as the investor.
Yeah.
Am I expected to read those 45 pages?
Ooh, that's a good question.
Okay. You have given me the pitch deck. I've read
and
understood
one more,
that.
But keep going.
And I've eye roll. And I've asked you questions and I've clarified. So I've done due diligence.
Yeah.
Would you still recommend that I go through each of those two areas and this other third one that you haven't told me about, with a fine-tooth comb and read through them? Because am I even going to understand?
I think it comes back to, do you trust the sponsor?
Yeah.
And if the answer is yes, you should read it and understand it.
Sure.
There's certain parts of it that are boilerplate. There's an entire section that just talks about how taxes, tax rates.
And that's the same for every single
You could
document.
skip that. Yeah, you could skip through that part. I think it'd be good to read, there's an investment summary typically. I would read that. I would read the risk section, which is super pessimistic. I would read the part about who are those sponsors if you don't already know about them.
Okay.
Those are probably the main.
You should.
I would read about the financial, how returns done, which is also going to be in the operating agreement. The operating agreement is going to have, so there's certain sections. I would hunt and peck. I may not necessarily read every single line with a fine-tooth comb, but there's certain sections where you go, ooh, this seems important. And we're going to help kind of guide you through that.
So what was that first?
The operating agreement.
There's an operating agreement.
There's a private placement.
Memorandum.
So an OA and a PPM.
And then this third thing
is called a subscription agreement.
Wow.
That is the document that you actually sign.
Okay. That's the one saying, I promise to blah, 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 give you money and then you'll pay me back.
Yeah.
You totally just ran into that one.
I am buying shares of this company at this such and such a rate for these many shares and given all the information to register it.
Okay.
And shocker, they repeat some of the other stuff in that one as well.
Sure.
So the most recent one I did, I think it was 10 or 11 pages.
Okay.
Again, that's one you probably you don't have to read as much. That one's more go through and fill it out. You do have to do a W-9, but that's totally normal.
Right. Well, you're going to get paid some money and
yeah, so you gotta have that.
Claim it and
so
all the good
that's
things.
The fourth one. So those are high level.
Okay.
That's if you're doing a long-term investment.
Yeah, that's what I was going to say. That was for the long-term investment because you're buying equity in this property in a company essentially. Kind of. Which seems weird to me, but okay, let's say this is short-term.
Well, you're buying shares of a company that then is buying a piece of real estate, and the company owns the piece of real estate, and then you own
Do
the
you
company.
have to do that for every single piece of real estate?
Just the big ones.
Interesting. What counts as big?
I don't know. It's up to you to define it. Over $1 million, I'd say.
So if you were just buying like a single family house, you probably wouldn't do something like that.
Let me answer that more precisely. I would do it for anytime you are selling shares of a company to buy a property. Each one of those is going to be an individual one. Now, typically, it only makes sense to do that on larger properties. You may not be able to hear this, but our dog is clearly getting into something, and it is agitating Jesse, but we're going to soldier on and not worry about it. So if you are doing a loan, which is a different type of structure, you don't have any ownership, the paperwork's actually a lot more straightforward. There's only 2 documents that you care about. There's the promissory note. This is the agreement saying, hey, thank you for letting me borrow money. Here are the terms at which I am borrowing said funds. And then the other one is, and it depends on the state you live in Oregon, it's called a trust deed. And it is essentially the thing that is saying, and here's the collateral, which is usually the house, for that loan.
Okay.
That's it.
Huh. So that's a lot more simplified then.
Yeah, and the trust deed is
documents.
like, it's a standard document. Honestly, you don't even need to read it outside of just making sure it has the right address and the right names and everything that's spelled correctly. Like, that's all you need to check. That's like, it's such a standard form.
Interesting.
The promissory note, ours is only a page long.
Okay.
I'm sure that
it could be more complicated.
It could be a lot more complicated. Probably should be a lot more complicated. But like I like ours because it spells it out pretty favorable. Like, it spells it out very simply so that a normal person can understand it. And honestly, I'm like, yeah, it's just a loan, man. Like, we got money. I'm going to pay you back no matter what.
Right.
So if it's I'll pay you back no matter what, I really don't feel like you need to get complicated about that since it's no matter what.
This is kind of related, but outside of diving into the legal documents, which we're going to do in just a second. But is there a better investment? Or I guess what I'm saying is if I'm the investor, which one is there one that's more risky or less risky? If I'm I'm buying into this equity, it's a bigger investment. There's a lot of people buying into it versus I'm paying into this loan that you're going to pay me back for. I mean, structurally, they're very different, but
I would say categorically, no. One is not necessarily better than the other. There's just different pluses and minuses to each.
And really, you should understand the
and
legality or the nuances of each of those, regardless of which
are going to be influenced by those 7 other categories, right? Who is the sponsor? Who's doing it?
Yeah.
What is the property? Where are they doing it? What's the project they plan to do with it? What other debt is held on it? Like, all of that other stuff.
That all makes sense.
It kind of builds into, does this investment make sense for me?
Sure.
Now, the legal documents is kind of it's checked all the other boxes. Now we're just making sure that the legal documents match what was said and everything else and what I know about this person.
Okay. So theoretically, it should be straightforward to read through the legal documents if you have learned about everything already.
Yep.
All right.
Yeah. So there we go. There's a little bit of background.
Yeah. No, that is helpful about what would be included in legal documents so that when you're holding them, you're not just I have no idea what this stuff is. What am I reading? So here's some high-level questions that you kind of included in this list that I think are great to focus on. So the first one is, what is the legal structure of the offering, which is kind of what you just mentioned, but really it's things like what are the sources of the funds? Is that clearly outlined? How will payback happen? Is there co-investing?
Yeah.
What is all the legality of who is going to be involved?
Am I buying equity? Am I giving a loan?
Yeah.
If it's a loan, will it be payments during the hold period or will it be a lump sum? If it is equity, it's, when do I get paid? Who gets paid before me? Who gets paid after me? All that stuff.
Sure. And
I'm just gonna let him chew your boot. Yeah. So.
There's another one in there too that I think is important where. And you didn't quite mention it in the other areas, not necessarily, but it's what are the reporting requirements? So it's kind of as an investor, what can I expect to get from
Correct.
you as far as like,
Yes.
what are you going to tell me? Are you going to disclose all the information or just a little bit? And
Yeah.
at
And
what
when
rate?
are you going to tell me?
And yeah.
Yeah. It's good to see that it's written down. It should
Sure.
say it somewhere in the operating agreement
Sure.
what that report cadence is and what the expectations are and how often you should hear back from them.
Okay. And then this one I find very interesting. Under what circumstances do the investors get a vote
Yep.
in all of the decision making?
Yeah. So to be clear, if you're alone, you get no votes. If you're buying into equity, there are limited times when you get a vote, but usually it's whoever the sponsor is. They're the managing partner.
Yeah.
They make all of the day-to-day decisions. Now
that would be outlined
in the
in these legal
agreement.
documents. Yeah. Okay.
Yep. It'll definitely say it in the operating agreement, and that's kind of like the operating agreement is the winner. The
Yeah.
PPM, if there's a disagreement between the two, operating agreement is the one that you go with. And then the subscription agreement, there's less of an overlap. But yeah, it will tell you, hey, here's the time that you can vote. Like if there's sometimes it might be, hey, we're making a decision on a really big capital decision. Or will we sell or refinance or keep it? Like that's a big decision. Sometimes you get to vote on that one. Sometimes you don't. If something happens to the sponsor and you got to find someone new, or the sponsor stops, isn't doing what they said they were going to do, that's when you can come together and vote them out. Essentially,
and then you hire someone else to be in charge.
Usually it will spell out what that process is to hire a manager to come in and run it.
Interesting.
Yeah.
So in every set of legal documents, it has that outline of
it should
what comes next.
If you're buying equity, yeah.
Interesting. I had no idea that was in there every single time.
Yep.
So here's another possible scenario that you bring up in here is, let's say additional capital needs to be raised.
Oh yeah,
How are you going to address that?
Yep.
And are they going to come back to me and ask for more? Is it going to be spread evenly? Like who's going to come up with that?
Yeah, it will say that also in the operating agreement. I think it also says in the PPM if I remember correctly. What you want to know is, am I required to do it? And if I don't, what happens?
Right. Yeah. Well, do I just
typically the answer is yes, you're required. But if you can't, other people can do your part for you.
Interesting.
No, it's usually no one new, but existing people can cover for you, and then they get a little bit more equity. They get some of your equity. It's all proportional.
Which makes sense because
yeah. It will also spell out how much advance notice you need to get. Like, is it 10 days? Is it 30 days? Is it 90 days? Like,
sure.
Yeah.
And then there's some other things in here that I feel like are worth revisiting. I feel like we talked about them before.
Yeah.
But within the legal documents, revisiting like the payment structure. So a waterfall payment and like preferred returns.
Yeah.
How do you, like as an investor, how do I wrap my head around how to read those things and know what I can expect?
Yeah, and honestly, that's the one where it's like you go with the pitch deck, or in my case, the pitch website.
Yeah.
Because it's usually going to be visual.
That's
on how
more
it shows
straightforward
it.
than the legal.
And then the legal is going to have, there's
Line by
usually
line.
like 3 or 4 places where it says, here's how it works. And depending on how complicated the waterfall is, will depend on how complicated the paragraphs are.
Sure. Do the legal documents ever take, visuals and information from the pitch deck and put them in there?
No, not really.
They all make it super annoying and
no. I usually
boring.
I give my attorney the pitch deck so he can see it all, and then
so as he's writing up
the words,
the documents, it matches.
Yeah.
Huh.
Yeah, and the first time I actually had to teach my guy the first time around about preferred returns and how I wanted that structured and done, because he was like, I've never seen this.
So give me like the 30-second description of waterfall and preferred returns.
So we got a whole podcast episode about it, so you can listen to it if you're interested. But no, so waterfall is the way in which people are getting paid. Imagine you have a bucket of money that you're pouring, and like, where does it first go? So a very simple structure, which is one I've recently done, is 20% goes to the manager, 80% goes to the passive investors. Super easy waterfall. You can imagine just 2.
Yeah.
It can get a lot more complicated, where you might say, hey, you know what? All the money is going to go to the investors until they reach some internal rate of return. Let's just call it 8%. Once that's done, Then we're going to switch over to a 70-30 split. Now the managers are going to get paid 30%. The investors will get paid 70 until the investors hit the next IRR hurdle. Let's call it 15%.
Mm-hmm.
Once that's hit, then it switches to a 50-50 split between the manager and the investors.
Okay.
That works really well if it's like
can get pretty complicated.
Yeah, and that's going to be all spelled out in a bunch of paragraphs or sentences at least.
Our sponsors typically pretty well, okay, I could ask about you because you don't know what most sponsors, but if someone were to come to you and be like, I do not understand this payout structure, would you take the time to kind of break it down?
100%.
Yeah. Let them know, like, okay, if I put in this amount, when can I expect returns? How much? What are you getting paid?
Yeah, and on my pitch deck, I have a visual where I show, like, here's how the money flows.
Sure.
And then I have a nice little chart that actually shows, here's the projections every year, just so you can actually see that amount.
Have you ever had someone, this is related to the legal documents. Have you ever had someone look through the legal documents and go, this doesn't make sense, or this is a typo, or, like, I was reading this and it doesn't seem right.
Not yet.
That's good.
Yeah.
Probably good.
Not yet.
Either people aren't reading them or they are and everything's great.
Well, I think, again, I think what a lot of people do is they're looking through the marketing materials.
Sure.
And if the legal documents match what's in the marketing materials, they go, okay,
it makes sense.
I feel pretty good about this.
Sure.
And
you're not going to read over it and use a red pen to highlight all the ins and outs of it.
Yeah. Correct. Yeah.
You might do that as the sponsor. But
yeah. Oh, I do. Definitely. Before I hand it off, work
Sure.
with the lawyer and I help say, no. I mean this. It should be this or blah, blah, blah.
Yeah. So there's one more small section in here kind of related to the preferred returns, but I think it all kind of falls under what we've talked about and really just looking at the nuances of what is included in those legal documents as far as like the financial returns, the outline of the property, who's investing, how that's structured. So you did a good job outlining.
Yeah, honestly, in a cheat you should do is take those PDFs, toss them in a ChatGPT, ask it questions.
That's interesting.
I wonder if you could even, I've never tried this, but throw the pitch deck in as well. And just be like, hey, compare and contrast these.
That would be an interesting experiment. Yeah, to add the pitch deck and add the legal documents without reading them, maybe, or with reading them. But just see what it comes up with.
Yeah. So that's another thing that you could do. At least get you kicked off on where to focus, right?
Maybe which areas to read more closely.
Yeah. Hey, I'm looking at these documents. Yeah, exactly. Where should I focus? Give me paragraph numbers and kind of help you. But honestly, you should at least skim the entire thing and then actually read the sections that look interesting to you and follow up on those questions.
Cool.
So there you go. That's the legal documents.
Woohoo.
It really is. It's the last one, but it's also like the official one, which is
super interesting.
Yeah.
Because there's so many ins and outs to investments and thinking through like, okay, well, what area do I want to be in and who do I want to be working with? But really, you're right. When it comes down to it, this is the document that's going to, spell out everything that you're signing your money to and your time to.
And it's pretty unregulated. So if you pick the wrong person or the wrong investment, you could lose everything.
So all of those other sections do matter.
Yes, they do. They build up to this last
thing. Comes up
to. Yep. So there you go. That's those are the legal documents. Again, if you would like to see all 196 questions that deal with all of them, you can download Good Deals Only from my website, furlo.com. At that same place, you can also learn just more about investing with us and what it's like and us as sponsors and our track record. And I think we do a pretty good job of passing those questions there.
Sure.
So yeah, that's what we got for you. Thanks for listening. Have a great day.